What's up, guys? Just want to say I hope you and your families are keeping well with the current situation of coronavirus. Today we have a very exciting video. We're going to look at 5 ways that we can recession proof our life. The reason I picked this topic today is obviously because with coronavirus COVID-19 spreading, there's going to be a lot of economic impacts from the fallout of people being temporarily laid off and various other measures that are currently being in place by our local governments. These are going to cause possibly a recession, and that's why I want to look at today these 5 ways that we can implement in our lives that will recession proof our life. First thing I want to look at is establishing an emergency fund. This is very important. As such, as you're seeing in the current environment, we have the coronavirus spreading, there's a lot of job layoffs, there's government measures, and the big word is uncertainty. 6 months down the line is very uncertain, even 12 months down the line, we do not know what's going to happen. So with an emergency fund, this is essentially you saving every month, net after tax. I would recommend roughly around 20%, if that's achievable for you, of your net salary per month. You save for a rainy day, and there's no stopping you. Just keep on stacking that. And when it comes to financial situations like we're in now, where a lot of jobs are being laid off, or if there's an economic recession, you will have a baseline to fall back on. You will have money there to fall back on to pay your bills, to buy food, everything, mortgage. You will have that money there, which will always come in to help you. And even if you do not use that, in years to come, you could use it to buy a car, you could use it for investments. It depends how much you have stacked up. So do you think 20% is achievable for you a month? I want you to challenge me in the comment section and see if I can help you out with that. Next thing I want to look at is redundancy insurance or employment protection insurance. This is basically insurance that if you lose your position, whether it be to being laid off, whether it be to illness, generally they're going to match your salary or a percentage of your salary at least for up to 12 months, or you could negotiate a longer term. This is actually a really good initiative, and a lot of people, this is an overlooked section of what insurance is available out there. Not a lot of people are actually looking out for this type of insurance, and it's always overlooked. So this is essentially you pay them like you would with any other insurance, a monthly premium, and in an event where you lose your job, you get laid off, you get made redundant, well then you can have your bills paid, you'll have your mortgage sorted, you will not have to worry for at least 12 months about your financial outgoings. That will give you time to relax and look for another job. You won't have to hurry and pick any old job that's available. You will have that time to relax. So ring up your local insurance company first that you would use for a car or a house and ask them, do they have the redundancy insurance available for you? Next thing we'll look at is diversifying your investment portfolio. Now, a prior client of ours recently who retired as a pilot, he had put in his investment into just airline stocks. Because he's a pilot, he was familiar with the airline industry, he just wanted to focus on different airline stocks. Now, he did cover another number of companies in the airline sector, which is great. However, he just focused on the airline sector itself. Massive problem with that is, as you see now with the coronavirus impact, there is not many flights, if any, going on globally, and all airline companies have been affected by this. Some even have to go into administration, for example, and this is causing a lot of pressure on the airline companies and the airline sector itself, and there's been a really drop in share price in the airline sector, and he would have felt the full brunt of this across his whole portfolio because he is only simply invested in airline. Now this is why we need to diversify our portfolio, not just with stocks. We need bonds, we need currencies, different commodities. We could, gold for example as well is another one that we could invest in. So if you diversify, first of all, which investment you're going to do, and then for example with stocks you can go to different sectors. You can pick a construction company, agricultural company, maybe even an airline. You just need to diversify, have that portfolio absolutely diversified, and then not only will you reduce your risk, but you will also have a lot of safekeeping, that your money is in different sectors, and that will play mentally with you, that if one sector is performing bad, the other sector could be performing good. Next thing I want to look at is getting another source of income. What I definitely recommend for you to do here after this video is review my video Earn Money Fast and Side Hustles 2020, because this video details ways where you can first of all get money fast, and then different side jobs you could do on a daily basis in addition to your full-time job you have now, or you could just do them on your own merit daily, just as an additional source of income, because it's very important to have an additional source of income to fall back on if you lose your position in your current job, or some situation occurs where your current income stream halters. At least if you had a different source of income there, you could fall back on that, even if it's not that much, just on an initial term, that you could pay off your mortgage and all your other bills, and it definitely help you as a baseline, that you won't be panicking looking for a job and taking any old job. You can establish that setting, and then you can move on forward from there. So I definitely think it's very important to look if there's any ways where we could get another source of income in addition to the source of income we currently have. Last thing I'd like you to look at is to pay down your debt. Now, we get to a recession time, the last thing, there's so much going on in recession time. Your job might be unstable, you don't know about your financial well-being, so the last thing you want to be worrying about is your debt. First thing we need to look at is credit cards. These attract the highest rate of interest, so we want to get our credit card debt down to as close to zero before a recession occurs. Then we can look at our cars, our student loans and our other personal loans before we advance and try pay down our mortgage. Now, I don't mean throw out your social life. You need money there for social life. That keeps you motivated, keeps you going, and it's the reason that you want to live, be in existence. You don't want to be just paying down your bills every month. So if we can articulate that balance, if you have any spare money every month, use it just to pay down your debt. A good way to look at this is do up a monthly budget, have all your incomes, all your outgoings, and if there's anything left at the end of the month, just use it to pay off your debt. Because in addition to your savings, which was step one, and then you aggressively paying off your debt, then when a recession time comes, you'll be in not only great spirit, but you'll be in a great financial place to be. When everyone else is struggling, you won't be struggling as bad. You'll probably be more relaxed, if anything, and it will not be such hardship on you and your family. Now, just revisit them 5 steps and see how you can apply them to your life and your situation. Just remember, you're probably watching this video because you're worried that a recession is coming or what financial impact it will have on you. But you just need to step back, take a breather. Remember, you made it through a recession in 2008, and that was a really, really bad global recession. You made it through, you're here now, everything's okay. So you just need to focus on what you can control. You can't control if a recession is coming or a recession is not, but you can control your current finances. So you need to control your finances now. Incorporate that savings in step 1. Look at paying off your debt in step 5. Step 2, look at the redundancy insurance. Ring your insurance company, see if that's available. Run through with them all the conditions, see if you're happy. And then you could take that step out if you're worried as well about a recession that's coming. And you can just go through these simple steps that will have you very prepared for the next recession. I want to thank you for watching today's video, guys. Don't forget to like and subscribe, and check out my other videos. If you want a supercar for free, that video is just available as well on my channel. I also have, like I mentioned before, Earn Money Fast and Side Hustles that will help you with your additional income source. And there's a host of videos and more coming on investments, savings and budgeting. Thanks guys, take care now.